Good morning, bulls and bears, and welcome to your daily morning market update. The US dollar index rebounded midweek as risk aversion returned, currently trading around the 99.6 level after briefly dropping below 99 earlier in the session. Renewed tensions involving Iran and the Strait of Hormuz pushed US Treasury yields lower and brought volatility back into global markets. However, the dollar's failure to break above the key 99.7 resistance level suggests upside momentum may be limited. A major factor is the Federal Reserve's policy outlook, with unemployment around 4.4% and real interest rates near 0.75%. The Fed appears more focused on achieving a soft landing rather than aggressively fighting inflation. Markets are still pricing in the possibility of two rate cuts in 2026, which caps the dollar's long term upside. From a technical perspective, the index remains slightly bullish while holding above the 55 and 100-day moving averages. Resistance sits at 99.7, followed by the psychological 100 level, while support is seen around 99 and then 98.5. Crude is trading around $95 per barrel after a sharp rally earlier this week. Despite coordinated reserve releases proposed by the International Energy Agency, supply concerns remain elevated. Analysts noted that the proposed 400 million barrel release only represents a few days of global production. At the same time, disruptions in the Gulf region continue. A drone attack shut down Abu Dhabi's refinery, while alternative supply routes have not fully replaced shipments normally, moving through the Strait of Hormuz. Energy analysts estimate the conflict could be reducing regional supply by as much as 15 million barrels per day, raising the risk that oil prices could climb significantly higher if tensions escalate. Technically, crude has strong support in the $80 to $85 range. In the short term, the key pivot is $90. Holding above that keeps bullish momentum intact, with $95 and $100 acting as the next resistance levels. Gold has stabilized after a pullback from recent record highs, currently trading around the $5,100 per ounce area. In the short term, prices have been pressured by a stronger dollar and concerns that rising oil prices could keep inflation elevated, potentially delaying Federal Reserve rate cuts. There has also been a temporary slowdown in central bank gold purchases at the start of the year. However, longer term demand remains strong. Central banks are still expected to purchase roughly 800 tons of gold this year, and ongoing geopolitical uncertainty continues to support gold's role as a safe haven asset. Technically, gold appears to be stabilizing. Support sits around $5,050 and the key psychological level of $5,000, while resistance is seen near $5,200 per ounce. Finally, the Aussie has strengthened to around 0.72 against the US dollar, reaching its highest levels since 2022. The move is being driven by rising expectations that the RBA could raise interest rates at its upcoming meeting. Markets now see roughly a 75% chance of a rate hike next week as rising oil prices increase the risk of higher inflation. Technically, the Australian dollar against the US dollar remains in a strong uptrend, trading above its major moving averages. Resistance sits near 0.72 and then 0.728, while support is seen around 0.707 and then the key 0.70 level. That's your morning market update with geopolitical risks and central bank expectations both in focus. Volatility across currencies and commodities is likely to remain elevated. Thanks for watching, and I'll see you in the next update.